Okay, welcome everyone. Welcome to the trade findings and adjustments. It's not a commentary, trade findings and adjustments for Thursday the 6th. We have Good Friday tomorrow. The market will be closed. I'm going to make this I'm going to call this a down and dirty trade findings and adjustments. And what I really want to go through is what you are up against in general. So if we're going to talk trading, I want to know, what are you guys up against when it comes to trading? What do you feel are those things that are against you? Okay. Institutional traders. But really, David, institutional traders are what you should be following, right? Yes, they'll move the market, but institutional traders sets the trend that you should be following. So I don't know if that's what you're up against, but they could be a competitor. I'll buy that one. What else? Volatility. Okay. So let's talk volatility really quick. If you're going on a directional trade, you're totally hammered, right? But if you're non-directional or if you're collar trading, those downward movements are great opportunities to make something on the way down, to convert to shares or to hold on to cash and make money on the way back up, right? I would totally agree with that one. Wow, both of you, I'm going to mix them both together. Program / algorithm trading, right? Computer program trading, where it's already set up. And it just hits certain prices, but you guys have done that your whole life too. I hope you realize, both of you that typed in program trading or algorithm trading, anytime you set stop losses, anytime you set exits that are predetermined, you're doing that program trading. I mean, I could almost say you're part of the problem if that's a problem for you. But you're up against that because that's just the way life is. You do it yourself. It's kind of funny because they're like, oh, those program traders, but we do it ourselves, right? Any other thoughts that are here that you guys want to mention, what you're up against for trading? Hey, Jeff, welcome. Nice to see you here. While you guys maybe think about a couple, here's my focus today. Here is your option if you aren't doing it yourself or having I want to call it professional, or having Hurley Investments invest for you. So, I've run into an advisory firm called Drive Wealth Advisors. And Drive Wealth Advisors are in 5 or 6 different states. I have a gentleman whose mother passed away, and they offered, he has some money, so he offered to have them trade some of it because they wanted to diversify a little bit away from what I was doing. And I have another client who has had money with them for 10 years, has had zero growth, and yeah, it's just unbelievable. He's had zero growth, and the short answer is he was looking into what they were doing, And it's funny because the same guy at different times sent them these portfolios that they have that they run through, and it's obviously program trading where, hey, I'm gonna re-switch this. So we're gonna call them the big box guys, right? / losers. So the core holdings change weekly. If you had a company whose core holdings changed weekly, how would you guys feel? Would you be like, well, I'm not going to say anything. What would you think if your core holdings changed weekly? They're day trading a portfolio, which is kind of funny. I like that one, Dave. But if your core holdings are changing weekly, I guess the question is, are those core holdings? Yeah, so obviously they aren't core holdings. They are commission positions. And it's sad because both of these people were told, well, we don't work on commissions, which means maybe they don't, but the company gets X amount of dollars for putting millions of dollars in certain funds. And literally, core holdings change weekly. Well, Kevin, depending on the market, you need to be in different positions. Okay, we're talking about core holdings. If your core holding is changing every week, you will not take advantage of compounding returns. You will not take tax advantaged returns. With all due respect, whatever excuse you give me for core holdings changing weekly is bullshit. It's the flavor of the month, and the sales manager is being told what to push money into so that they can get 1201B fee commissions for the position. And that's what you're up against, because that's how they pay for their buildings and their fancy cars and their suits and all that stuff. That is the problem with big boxes. I'm going to say another thing. The licensed registered investment advisors don't know what they are putting you into. The only position that was the same, even though it was the same firm, 1 month later, same advisor group. I don't know if it was the same advisor, but it was in the same advisor group under the same name of the advisor, right? The only position that was the same in this 5-week difference was Ironwood Institutional Multi-Strategy Fund. And the interesting part is strategy, I can't spell. Multi-Strategy Fund, and it is an LLC. So someone really quickly, this is another fund. What do we know about an LLC? Someone tell me. It's a really easy when you have an LLC, but funds have what? What do funds have? David, you know I've been talking to you, right? Funds have an EIN number where they have to pay their own taxes. So taxes come out of the sale of positions before you get taxed on it. Any fund, period, is a fund which runs as a business and it has its own EIN number. That's the way it is every single time. Now, for me, I was like, let's find out what's in this. So I went to Ironwood, I went to funds, and as I was going through these, let me move this out of the way. I'm looking for their multi-strategy fund. Don't know what this one is. So I went to funds, came on down. I'm just like, huh. There it is right there at the very top. You have an Ironwood Institutional Multi-Strategy Fund. And the prospectus. Like, hey, I'm going to do a little bit of research. Can't be too bad. One I researched was 1,300 pages. This guy was only like 72, right? So I'm like, hey, here's their prospectus. It's 72 pages of what's in this fund. And as I went through, I found out a bunch of cool things. And there we go. This is one of the best ones. I go through everything and I find that their net annual expense is 9.61. Now there's a lot of fine print down here on the expenses, right? But the expense was 9.61. Shocking. Is that a fair expense to pay for a fund? Now this is total expense is 9.61, including taxes. Can someone tell me what it's not including? What's not included in that 9.61%? Well, Kevin, I saw it had an advisor fee. That's their advisor fee to sell it. Correct, David. But the Drive Wealth advisors also tack on their advisor fee. Total 9.61 plus 1.5 equals 11.11. I want it to be triple or quadruple sixes, right? Four sixes, 3 6s. I know we have a small group. Is there anyone here that's okay paying 11.11% fees to go into a fund? Anyone? Jeff, thank you for saying no. And David, a hell no is pretty smart. I agree. And there's another 72 pages you can look at. But David and Jeff, why are you not okay paying 11.11%? Why are you not okay paying 11.11%? Because it's too much, because it's excessive. But any fund is at least 5 to 13.5%. I can even go through the Vanguard funds and show you this. But I'm actually looking for something else, David. Why are you not okay paying 11.11%? William, I'm going to hold off. Yeah, William, you type it in and I'll say it if no one else comes in before then. Yeah, I'll just do it. Okay. It wouldn't matter if the fund made 50%. Then it's justified, right? Then it's justified. Or if it possibly could make 20%, because you would make more than the fees. But as you then go through, they do have audited financial statements. And I found it. This goes through the last 3 years, roughly. Audited financial statements, you'll go through and for the performance overview, the fund pulled in 3.71. Well, it's net. Yeah, it's net. They're different positions. It's not net fees. And you can research it because it's all here for you. You can research it. They've got everything in here. I mean, it's all right there. But as you go through it, I should take that. That's after taxes. Doesn't matter. I should take it. Anyway, as you go through it and you calculate the numbers and do your own returns, a 3.172% isn't a profit against the fees. Oh, but it's just one of the positions. Well, you can go to a bunch of others. In fact, if you want to, I'm pretty sure you can go to the BlackRock. Nope, it's Blackstone. Private Real Estate Income Trust. It's like 1,300 pages. And you know, they only want you to put 150 grand into this. But if you do all your research through this crap, sorry, this one's 683 pages. The other one that's the big one is the Blackstone Private Credit Fund, BCRED. But if you go through, you will find 7 of the 9 core positions don't make you any money. It's mathematically impossible because the fees are more expensive. Blackstone Private Credit Fund, Keystone Private Income Fund, Blackstone Private Real Estate Income Trust Joint, HPPI Real Estate Fund, Partners Group Equity Master Fund, Ironwood Institutional Multi-Strategy Fund, Fidelity Multinational Large Cap Fund. There's nothing to make any money here. The pictures look pretty. The pictures look pretty. But the investments suck balls. And that's your real picture of what you're up against when you go to these guys that put you into funds. I can go through and will go through every single fund that you guys want me to. I can go through Vanguards and show you the real returns. I can show you where they even will tell you fund returns after fees, yet it's not correct. They're not counting the fund fees, they're counting the advisor fees. You cannot make money if the return is 3.72 or even 7% over 5 years because it's an average. And averages are not equal to portfolio growth. None of those work when your fees are 11.11%. But yes, this is what you're up against. With that said, I appreciate you guys being here today. Thank you very much. Jeff, I'm going to answer your question here in just a minute. But thank you for being here today. I hope this is helpful for you. Please give me a call at 888-287-1030 or send me an email to khurley@hurleyinvestments.com. Appreciate you guys being here with me today. Thank you very much.